Episode 1. Welcome to your Wealth by Design, a low stress systematic approach to investing. This is my attempt to build that system. But before we dive in, just remember this is what works for me and may not be appropriate for you. I am not a financial advisor, and this is not financial advice. So please do your own research before making decisions with your own money. Let's take a look at the portfolio. A lot of work went into this. I'll give you a quick tour. I won't go into extreme depth today, all in one video, but as time goes on, I'll discuss more and more of the methodology and the systems I used to employ this strategy. Up here, we've got base settings. This is scraped from the web, so it's updated. Everything in here is updated with very few exceptions, but it's all live pulled. So we got the Fed rate up here. We've got CPI right here. We've got the benchmark, which is S&P 500. I've chosen VOO, Vanguard. It's the lowest cost version of the S&P 500. This will change colors based on if we are above the 50-day moving average or the 200-day moving average. Basically gives us a measure of the U.S. market's health. We've got some benchmarking things here, which I'll go into later. We measure the level of fear or greed in the US markets right here as it changes over time. We have formulas that calculate the current state of the market. Right now it's considered quality neutral. AI wrote this little blurb here. We've got up here our savings account. We've got a formula that will calculate how quickly we should deploy that savings account, whether it be quickly like right now because of various factors I'll go into later, or if the market takes a turn for the worse, maybe we slow down our deployment of cash so that we can wait for a clearer signal as to when we should buy. The goal of this is to let the algorithm do most of the thinking and the stressing for us, monitoring. All we do is take a look at it, check on it, understand how it works, and sleep well at night. Okay, so we've got our holdings here. If I sort them by name, you can take a look at the idea here. We've got silver and gold. All these assets are uncorrelated, by the way. Some more than others, but they are distinct. They are designed to be held forever. We'll not be trading in and out of random tickers. We would just be basically monitoring every investable asset in the world, and if someone's making money somewhere, we're going to be a part of it. Our portfolio will dynamically adjust between momentum and mean reversion, meaning that we will buy the strongest trends, or in the absence of trends, if everything was red, we will buy mean reversion. We'll just diversify. We'll be equal weighted. We'll put money equally across all the assets, waiting for a signal. So we've got silver and gold. We've got all the sectors in the economy, in the U.S. economy. There's 11 sectors. We've got globally, we've got every country, got Canada, we've got Japan, we've got crypto, we've got BTC and ETH, we've got emerging markets, Europe. What else we got? The Pacific, excluding Japan, so there's no overlap with our ETFs here. We've got Canada, and then because these holdings are market cap weighted, which is the standard, I've chosen to eliminate anything that is a specific strategy. So I'm going to deploy the strategies. So I want all the ETFs to be basic equal weighted. And because they're equal weighted, all of these sectors, they have every stock available to trade within that sector. But the small cap and mid cap are small portions of those ETFs. So I have to strategically add in small caps for domestic and international, and mid caps for domestic and international. So we effectively have small, medium, and large for domestic and international. There are 24 tickers total. And we monitor the performance for trend, the volatility for risk, and then we calculate a risk-adjusted score. The breakdown of this one is just if it's positive, I want to be able to identify if the trend is positive or negative. This one, is it more or less volatile than the average? And this is just the average. This is the top 50% of my portfolio. This is the bottom 50% of my portfolio. And these weights are from Friday, so I'm going to update them. So we have them in range, an order from lowest weight to the highest, and I've put some intelligence in there so that we are not underweighting. There's no point where these are zero weighting, and there's no point where this is like 8% of the portfolio or something like that. Everything needs to get a piece of the pie, but they are ordered based on their relative magnitude. If they are so low that they don't really score, they're given a minimum position size that will adjust based on market conditions. If everything is red and everything is terrible, it'll be more equal weighted. If everything is ripping and something is going up, then everything is going up, then we're going to adjust them according to their relative strength. This column was aspirationally, maybe I add in a generational company if it comes along, and I'll keep track of it by marking it as no, but generally everything in here will be held forever, which solves us the problem of knowing when to get in and out of different positions. If you only have two options, mean reversion and momentum, I'm betting that that's going to win most of the time. Over here, we have our trend check. Regardless of how well it's doing in the past, if it's not doing well now, then we will adjust the score so that we're not left holding the bag. I deploy a DCA strategy, a dollar cost average strategy, and I'm using a exponential decay so that I never run out of money. When it's a better time to put money in, I'll put in a bigger percentage of my pie, but it'll always be by a percentage, not subtraction. So, theoretically, I could never run out of money if I only ever put in 1% of my money, and the total is updated every single time. I update this every month. If we look at the performance of the actual portfolio, I use M1 because managing all these holdings would be very tedious otherwise. M1 allows you to create these little pies, and it will intelligently put your capital into them as you add money to your account, and you can just set the weights accordingly, and it'll try to maintain those weightings. But the main thing I want to do today is compare how I performed versus the benchmarks. So mine returned 0.66%, and this was with adding two new. I added the mid caps to this, so they weren't before. So the returns of those mid caps, domestic and international, are not included in this accurately. So I did a little better than this. If you compare it to the S&P returned 0.51, and I returned better than 0.66. So I started this portfolio last Tuesday, the day after the Martin Luther King holiday, and I've beaten the market every day since. Now, the goal is not to always beat the market every day. I don't know if that's really possible, but it's a good feeling. I want to see how far we can keep that going. If we compare it to the other benchmarks, QQQ, most successful ETF of all time, we beat it on the day. And the iShares World Index is probably the best parallel to my portfolio, which is why I've chosen to use it as the benchmark for the total portfolio, which is a world portfolio. So we beat it on every day, every ETF for the day. And if we look at it on the 1 week, So we've got officially about a week, of returns. So for the week, I'm on 3.89, and for the QQQ for the week, we're looking at 2.41, so that's a beat. Vanguard for the week is a pretty big beat, and the world index for the week, still a beat, but it's getting closer. Uh, and that's pretty much all I wanted to cover today, is to just the first video out there, give you a quick tour of the spreadsheet. I'm going to update my portfolio to these new weights, and we'll check back in tomorrow and see how that goes. The goal with the channel is to do a daily post. I want to document my returns every day, what I said the allocation was, how did they perform. If we take a look at yesterday's weightings, so obviously the things that I put towards the top, I expected it to do better. Silver did great, gold did great. This one actually returned really well because of the morning pop. It bought it after the market opened. So after the market opened, it it jumped. So I bought up here, and it kind of stayed flat all day. But if it was a pre-existing position, it would have seen this this return for the day. So it would have been really good. And then as you get towards the bottom, they get a little jumbled up, as you would expect. But I mean, what you want to see is like the top half of your portfolio that has the majority weighting is outperforming, and for the most part, it did that. So I think that's it for the first post. Quick tour. What we're doing. I'll update these holdings the next day, and we'll see where this journey takes us.